This week was not a pretty one for the markets. Many people this week have focused on the price of Ethereum going down, and as a result, the price of BMNR going down. But everything that was happening beneath the surface, from an adoption perspective of the ecosystem, from a macro perspective, from a news and institutional accumulation point of view, all tell a different story. We're seeing some massive moves in the Ethereum ecosystem, and as a result, BMNR specifically, and other digital asset treasury companies. And in this video, I'm going to be breaking out all of the news pieces that I saw this week around BMNR, Ethereum, and the ecosystem in general. It's going to be a big video as always, so let's jump right in. Okay, first and foremost, if you have seen these recaps before, let me know. They're generally jam-packed with information. And if you do enjoy them, please consider subscribing, liking the video, and sharing it out. That will help get the word out so that we can educate more people around what is going on in this ecosystem. Of course, none of this is financial advice. And what I will say is I, unfortunately, do have an apology to make because I was single-handedly responsible for bringing BMNR down. I did pick up more shares of BMNR on November the 6th, just a few days ago. I did also buy call options for BMNR. So that's probably a big reason why we are down right now. In this video, I have a bunch of news and I've grouped them into categories. Starting off, I want to talk about adoption first and foremost. From an adoption perspective, we had Cathie Wood on CNBC talking about why she is accumulating more Ethereum exposure. This video was put together by this user, Sam Altcoin ETH, and it's clipped of a couple of segments that we've seen from Squawk and from news that we've seen for Cathie Wood and ARK Invest this week. Of course, we know that they accumulated more shares. Let's give it a listen.
Stablecoins are usurping part of the role that we thought Bitcoin would play. So our bullish forecast out there is 1.5 million by 2030. Given what's happening to stablecoins.
Look at the date of these articles. That's November 6th. Cathie Wood trims her Bitcoin bull case on threat of stablecoins taking some market share.
Serving emerging markets in a way that we thought Bitcoin would. I think we could take maybe $300,000 off of that bullish case just for stablecoins. So
look at that date, November the 7th. It's right down here below. Cathie Wood's ARK Invest buys bitmine Ethereum treasury shares after cutting Bitcoin price target just one day earlier. This is all happening this week.
Watch that space. Stablecoins are scaling here, I think, much faster than anyone would have expected.
Long-time bull, Bitcoin bull, Cathie Wood on Squawk yesterday. The point she was making, I thought was interesting, and that is that maybe the notion that Bitcoin becomes more than just a store of value in digital gold. The idea that it eventually becomes something for cross-border transactions and instantaneous payment. That could be, she's basically saying stablecoin could take a lot of that market share.
I would go even further. I think it's already taking that, right? I think that's kind of her point.
So Bitcoin's never going to be anything other than digital gold?
For years, I think I've been coming on here and saying, hey, we know for sure that people want to use it as a store of value. Maybe one day it'll become a medium of exchange. You know, the question of always like, are you going to buy your coffee with it? The hard part about using Bitcoin for transactions in that manner is if you think Bitcoin is going to appreciate, you don't want to spend an asset that is likely to appreciate in the future.
Guys that bought the pizza. That now
correct. And so instead, what do? You spend something that you think is going to depreciate over time, which is the US dollar. And so the rise of stablecoins, I think, is really just taking the exact same asset, it's the US dollar, with the same monetary policy, you're putting it on new rails. And what we're finding is that the demand for dollars was way higher than we ever thought before.
So this is a really interesting argument that I want to spend a little bit of time here. We're going to talk a lot more about stablecoins, but essentially ARK's thesis of why they're moving over from that Bitcoin bull case into stablecoins, into Ethereum, is, as Cathie mentioned, that stablecoins essentially stole the use case from a payments point of view for Bitcoin. Bitcoin is seen more as a store of value. You buy a brick of gold, you buy it to appreciate, to protect your value somewhat. Whereas if we're talking about payments specifically, this is a more applicable use case for stablecoins on the Ethereum blockchain. Ethereum continues to see inflows of $1.2 billion in stablecoins over the past 24 hours. This was posted on November 7th. Solana and Plasma are seeing the biggest outflows, and we're seeing a massive discrepancy with regards to the Ethereum ecosystem from a stablecoin supply perspective. Now, Cathie Wood's thesis might have something to do with this, but we've been seeing this volume of stablecoins on Ethereum exploding for weeks now. So here you can see all the way back this Ethereum on-chain volume of stablecoins, and here you have them all broken out. Of course, USDT and USDC are the biggest ones there that comprise of the majority of that list. Stablecoin supply on Ethereum hits 184 billion November 6th, marking a new all-time high. So stablecoins is going to be big for the use case of Ethereum and for the adoption of the ecosystem in general. Dubai is now the first government accepting Ethereum payments. We're seeing massive growth in Ethereum, around $200 billion worth of tokenized assets or real-world assets are now running on the network. So tokenization is another piece of this puzzle here, which we're going to see in big part. Japan believes classifying Ethereum as a financial product is going to curb insider trading. So this came out this week. Of course, I've shown this clip before of Larry Fink talking about tokenization of all assets. So tokenization is going to be a big theme as we move forward, not only of equities for the broader world to get exposure to US markets, but also real estate, also different types of asset classes that are less liquid generally. You're going to have a market that's going to be created as a result of tokenization. I saw this news this week. Google is integrating with the world's largest prediction market, Polymarket. This just came out earlier this week. And this post by Sam Altcoin says millions will soon interact with on-chain predictions, and Polymarket settles through the Ethereum infrastructure. You can see this in the fine print of Polymarket here. It says that they are built on Ethereum. And so now users can have access to real-time prediction data on trending events, which enhances the visibility of those events. And it's going to lead to more volume since this is all being built on Ethereum. Here you have a post, again, by Sam Altcoin, a great resource, by the way, on Ethereum ecosystem in general, that Tom Lee retweeted. This is an interview that Raoul Pal did. And in this interview, he explains why Ethereum holds the most value, most builders, most activity, and most security, which we've covered in the previous videos in the past. Let's give this a quick listen.
What's one of the layer ones that's most interesting to you and why?
Much like the Mag 7, we will have a group of layer ones that will be the foundational layer for this new internet. Bitcoin is not that, because it's not a smart contract platform. So it's its own asset that you alluded to before, which plays a very specific and important role. So then you've got the smart contract platforms, and they're driven by Lindy effects, which is how long have they been around and did they fail? Ethereum is the oldest. Now, Ethereum stores more value than anybody else. It has more active users than anybody else because so much is built on Ethereum. The Ethereum ecosystem is gigantic. Because it's been around so long, and there's so many validators of the network, it is the most secure. And therefore, things with the highest value will tend to gravitate towards Ethereum. That's why NFTs have mainly remained on Ethereum. Why? Because NFTs have been the most valuable single pieces of block space ever created, and they will continue to be so. Like the single piece, most expensive piece of canvas, cotton ever created will be the Salvador Mundi painting by Leonardo da Vinci, or the most expensive real estate, Central Park in Manhattan, or whatever it is, right? So that's Ethereum's role. Ethereum's role is probably a large part of the financial system because they need security. They need something that is less risky. It's been adopted for a while, been tested, has a large number of developers.
It's also interesting that he talked about this Central Park apartment and how tokenization is going to end the age of the financial middleman. He referenced this article here from August 2025. I'm really bullish on tokenization because of the liquidity that it provides in the market that it creates for e-liquid assets that gives more exposure to investors to invest in whatever they want. It's going to lead to hyper-personalized markets, which is what we're seeing with prediction markets. You're seeing people create markets out of thin air for random things, and they might not be the most liquid markets, but they're definitely the most personalized markets. So it gives a power to the ordinary people to create their own markets for whatever they want. And I can't dive too in depth on this because this video is going to be way too long, but what's interesting about this interview with Raoul Pal is that nobody is really discounting Bitcoin. They're just saying that, hey, Ethereum serves a use case that Bitcoin can't, and as a result of that, Ethereum is also going to be a winner. Nobody is saying we should sell out of Bitcoin to buy Ethereum because Bitcoin is going to go to zero. They're just saying that Ethereum is going to be another winner in that space. And it was really interesting how he referenced it as the Mag 7 of crypto and what those L1s would look like. Ethereum is by far the most liquid blockchain ecosystem. We just heard Raoul Pal talk about this, but here you can see the total app capital with Ethereum leading the way with $599 billion of app capital here. Of course, a lot of this is stable coins, which you see here in yellow, and the other tokens, which you see in orange. Real world assets are in purple here, and you see the massive discrepancy of volume. Solana, which many people view as a real player, just doesn't have the same volume that Ethereum does. Here you see the highest monthly transaction count ever for Ethereum. This was on November 5th. And so you see this massive flow of volume. And here's that same transaction count broken out one level deeper, the transaction count on a per L2 basis. And this just goes one level deeper to see a little bit of a breakdown in terms of an L2 perspective, how that transaction count looks. Here you can see application revenue on Ethereum is above $42 million per day, the highest the network has ever produced. Revenue going up means users are paying to use apps. And of course, that's adoption, right? This moving together with the rising stablecoin supply is the healthiest signal an ecosystem can give. Ethereum is obviously going to grow higher. Okay, so now that we talked a little bit about the adoption, let's move into some specific news with regards to Ethereum. And really, it's around ESBET in general. So there was some news around ESBET that was going around. So ESBET posted this on November 4th, saying that they generated 459 ETH from staking rewards last week. The Ethereum that ESBET holds is 100% staked in institutional grade manner and keeps compounding value for shareholders. This is why they believe ETH to be a superior treasury asset, because it is productive and it's giving back to investors through staking rewards. Now, I'm going to talk a little bit more about staking in general, but ESBET is trading for $10, owning $2.77 billion worth of ETH, generating $88 million annualized from staking. So this user, Kyle, here is arguing that they're fairly cheap because of the staking rewards. Now, we know that BMNR does not stake, and of course, ESBET is adding more to their Ethereum. This is from November 6th. So on November 6th, with regards to ESBET, we saw this post. A wallet linked to Sharplink Gaming redeems 5284 Ethereum and deposits 4364 ETH for 14.7 million. So, of course, this is something that raised some eyebrows, and it also started stirring up some people in the community. I quickly saw this post saying that this is an incorrectly tagged wallet. It does not belong to Sharplink. Sharplink has not sold any of its ETH. The rumors suggesting that Sharplink sold 14.47 million of ETH today are incorrect. A wallet on Arkham seems to be wrongfully labeled. People seem to be suspicious about this denial, but Sharplink is public and as a result must disclose any selling of the underlying asset. And this comes on the back of the news around ETHZilla, which is essentially selling some of their ETH to raise some money to buy back their shares. Sharplink is not issuing debt to buy ETH. They're selling shares of equity to buy ETH. This means that there's no debt spiral. You're not being diluted. You still own the same Ethereum per share. It's the Ethereum per share that matters. Sharplink does not need to buy any more Ethereum, and they will still increase their net asset value because they stake 100% of their ETH. They're earning about $83.5 million annualized as a result of staking, even though they can't technically call it revenue because Ethereum is not recognized as money. Ethereum went up in the last few months. ESBET did not. So there is a value play here, essentially. I believe ESBET is the biggest digital asset treasury company behind BMNR. There's a little bit of drama that was going on this week with ESBET, but the main reason I wanted to point your attention to ESBET was because of the staking rewards. I mean, they're generating thousands of Ethereum through staking here. Since they launched the Ethereum treasury on June 2nd, and they staked 6,500 ETH, which is about $24 million in just 5 months from staking yield. So they're generating money for their shareholders. They're having more Ethereum per share for their shareholders, in addition to buying Ethereum on the open market. Now, stake has been one of the main critiques for BMNR specifically. Keep in mind that 29% of all Ethereum supply is staked. So that obviously affects the price because it affects the total supply that's available from a liquidity perspective. And then I also saw this post from BMNR Bulls, and I thought it was a good thread around why bitmine has not announced staking yet. And I want to spend just a moment on this before moving on. And we have a lot to get to. So here's some of the staking benefits for bitmine: higher yield or reduced fees, negotiated terms, lower commission fees, institutional control and security. Bitmine might prefer bespoke staking arrangements, something that gives them more control and risk mitigation, brand and market credibility. Becoming one of the largest active Ethereum stakers, not just a holder, would make Bitmine a major player in Ethereum's infrastructure, positioning it as an ETH native yield company rather than just a treasury holder. Steady on-chain revenue streams. Staking creates income, which is recurring yield in Ethereum, strengthening cash flow and the balance sheet performance. So obviously, we know staking is going to be good. Benefits for the staking partner: a single large client staking hundreds of thousands of ETH guarantees consistent validator rewards and commissions for the provider. It's a stable business. Partnering with a public company like Bitmine gives the staking provider major legitimacy. If the provider runs validators for Bitmine, it gains more network voting power and influence within the Ethereum ecosystem while still staying decentralized in spirit. And a long-term contract with Bitmine could open doors to other institutional clients seeking similar structures from a staking perspective. So essentially here, BMNR Bulls is arguing that it's a win-win dynamic because both sides get what they want. Bitmine secures higher yield and control over their massive Ethereum position, and the staking partner gets scale, prestige, and long-term revenue. It's similar to how energy companies negotiate wholesale electricity rates, massive customers get better terms, and provider gets guaranteed volume. So we can highlight here the benefits for BitMine, as well as benefits for the staking partner. Yet the fact of the matter is that we don't have a lot of details around what's going to happen with BitMine staking. And after seeing how much staking rewards their competitor in ESBET is making, I think a lot of people are starting to ask the question of why hasn't BitMine staked their Ethereum yet? What is the plan for them to stake their Ethereum? Are they going to wait until they accumulate 5% and then do it after because they get some leverage by doing that? Or what is the roadmap essentially after 5%? That's a question that I've been asking myself as well. Okay, so until we have other developments on that front, we can move on. We did have a balancer hack this week. So we had some news with regards to a hack of balancer, V2 vaults, and liquidity pools, an exploit. This post explains everything about it with regards to the actual exploit itself. The hack was about $128 million. I think it happened on Monday, on November 4th. I don't really want to dive too in depth on the balancer hack in general because it's not really pertinent to BMNR and it's going to take us too much time to explain the technical details. So we'll move over to accumulation. Now, let's talk about some accumulation that I saw this week. So, of course, every single week, BlackRock is owning more and more Ethereum. And I keep seeing this every week. BlackRock just bought 15,000 ETH worth $60 million here. ETH whales have bought a massive 394,000 ETH worth over 1.3 billion in the past 3 days alone. So you can see here what the Ethereum whales essentially have bought, and this also includes BitMine, what they're buying. You can see here the total value locked for Ethereum has set the floor for the market cap. So the Ethereum ecosystem total value locked has surged to 379 billion, 16-fold since 2020. And historically, it's set the floor for the stock price, which you can see here in the yellow line. The total value locked is in blue. Liquidity, lending, and staking keep growing fast, suggesting that the downside is limited because as you lock more value, then of course you have more adoption, you have more staking, and you have a floor that's set on Ethereum trading. You can see here the Ethereum trading volume is surging with ETH digital asset treasuries trading activity hitting a volume record of 17.7 billion in total trading volume. We also saw this mysterious insider Bitcoin whale going long in Ethereum, opening 137 million ETH long with 5x leverage. And here, with regards to the adoption in general, I also saw this post. This was from an interview that Tom Lee gave this week. And it's only a 52-second clip where he talks about the ecosystem in general from a global markets perspective and essentially highlighting the runway ahead. And Tom Lee is way more articulate than I can ever dream to be. So let's give this one a listen.
Ethereum's network value today is, maybe 400 billion or so. But global GDP is 90 trillion, okay? The total size of global financial markets is 200 trillion, maybe more.
Yeah.
It might even be 300 trillion. How much of that ends up on blockchains? The idea, according to Larry Fink, is to move 100% of this onto the blockchain. So we're talking trillions of dollars of assets moving onto layer one blockchains. That creates a lot of network value for the underlying chain that's essentially the base layer. So yeah, it's...
Yeah, you mentioned Larry Fink multiple times, and also Sergey Besant. They're all pro this direction.
Yeah. So we could see, exponential upside.
So Tom Lee obviously thinks there's exponential upside here as you get more worldwide adoption of Ethereum because the global market is so massive compared to the crypto market, which in relation is relatively very, very small. Now, let me talk a little bit about some adoption of BMNR specifically. So like I said in the beginning of this video, Cathie Wood is becoming more and more bullish. She bought 48,400 more shares of BitMine today. This is from Friday, November 7th. You can see some of the purchases here. And this is also from November 6th, the day before. Here, Cody posted the Cathie Wood purchase of BitMine as well. So she's buying in big chunks and she's buying fairly heavily. Vanguard disclosed shares of BitMine, the world's second largest asset manager with $9.3 trillion under management, has officially disclosed a stake in BMNR. Vanguard disclosed ownership of both ESBET and BMNR. So you can see that the ownership in BMNR is 2.86 million shares valued at 148 million USD. And the SBET exposure is 2.7 million shares valued at 46 million USD. So that was really interesting from a Vanguard perspective. However, there was also another major institution that made waves this week with regards to their stake in BMNR. And that was, of course, JP Morgan. Now, JP Morgan, unlike Vanguard, they cut their SBET ownership by 70% here. And they, by contrast, took a massive position of over $100 million in bitmine BMNR, 1.974 million shares of BMNR. So while Vanguard is just buying both the biggest names in the sector, Jamie Dimon and JP Morgan is picking a winner, and the winner that they chose is BMNR because they're essentially deleveraging from SBET and increasing their position in BMNR. So 1.97 million shares worth $102 million. The largest bank in America now has a 9-figure position in a public company that acquires Ethereum. Of course, Tom Lee reacted to this, and the BMNR themselves from their official account reacted to this. JP Morgan essentially taking a stake in BMNR. And I agree with this post, right? It is capitulation. Jamie Dimon 2 years ago famously said, if I was the government, I would shut Bitcoin down. Last year, he said, look, I don't care. Stop asking me about crypto. And meanwhile, this is an interview that he gave recently. He says, crypto is real. It's going to be used by all of us. And you can see Larry Fink at the table too. And as we know, Larry Fink is very bullish on tokenization and on Ethereum as well.
Skeptical of crypto at one point. He was still
I've gotten away with no damage so far. Crypto is real. I mean, blockchain, stable coins. You have a JP Morgan deposit coin. You can move stuff. Smart contracts are real. All that stuff is real. It will be used by all of us to facilitate, better transactions and customer service.
anybody.
So you heard it by Jamie Dimon himself. He said, look, stable coins are real. Crypto is real. It's going to be used by all of us. JP Morgan is now a Bitcoin bull as well, seeing the price of Bitcoin reaching 170,000 within the next 6 to 12 months. Keep in mind, this is the largest bank out there, and they're bullish on cryptocurrency. It makes perfect sense once you think about the incentives. Binance wants BNB chain to eclipse ETH because CZ thinks he can be the next Ethereum. Tether wants Bitcoin to dominate ETH as they hodl a lot of Bitcoin from the early days. Goldman and JP Morgan, by contrast, they have no invested chain and are being replaced by crypto payment rails. So they need to buy ETH, the most decentralized, neutral, and reliable blockchain from a client's perspective. And here you have a Tom Lee quote, Wall Street doesn't care about speed, they want ETH. So you're seeing now the banks are becoming the big purchasers of Ethereum and also the big purchasers of BMNR. And speaking of which, the institutional ownership of BMNR is increasing by a big amount. Of course, we saw Vanguard, we saw JP Morgan and others. You have Peter Thiel's Founders Fund that has a 9.1% stake in the company as well. So you have a lot of institutional demand, and that number is still growing even further. Bitmine holds 2.8% of all Ethereum in existence. They are the biggest digital asset treasury company in the world. They are continuing to accumulate more Ethereum. $139 million was bought by Bitmine earlier this week on November the 6th. Tom Lee is meeting with Sergey Nazarov at the New York Stock Exchange. And this post says, imagine Bitmine becoming the first public company to use Chainlink Oracle for verifiable on-chain Ethereum reserves. So, of course, one of the value propositions that I've talked about with regards to Bitmine is the network connections that Tom Lee has and the potential to make further inroads from a Wall Street perspective. Here you have stock trader Max saying, interesting observation, on September 4th, ETH was 4,300 and Bitmine was 40. Today, ETH is 3,250, Bitmine is still 40. However, it does enable the company to achieve their 5% a lot easier and for a lot cheaper. Falling Ethereum prices means short-term pain, but long-term gain for BMNR shareholders. And really, the value of a treasury company is in their underlying holdings. BMNR currently trades at a market cap of 12.5 billion, but they currently hold over 14.2 billion in assets on their balance sheet. So there is an aspect that's undervalued. Of course, here you have Bitmine even adding further to their shares. Another interesting piece here is when you look at off-exchange short volume, you see 41% off-exchange short volume for BMNR. This is essentially from dark pools, and it suggests that there could be a short squeeze in Bitmine. But I'll leave the speculation aside, because one thing is for sure is that we have all of this institutional accumulation from BitMine specifically, from an Ethereum perspective, and the adoption that we're seeing on the Ethereum ecosystem. From a technical perspective, Ethereum is in oversold territory, and you could soon have seasonality kick in. So this is from Crypto Rover. Ethereum seasonality can soon kick in. This is a comparison of the last 3 years of Ethereum. And here is the same chart from Crypto Goose, which suggests that going into November and December, we could see a rally in Ethereum. I also saw this from Stock Trader Max. I really like this chart. It's a very dumbed down version of a guide map for BMNR, which basically links the fallen Ethereum to the fallen BMNR, which is very logical. But that also cuts both ways. If Ethereum starts to climb to 4,000, 5,000, 6,000 and beyond, then of course BMNR is going to rally fairly hard. And finally, let me talk a little bit about the ecosystem, because Ethereum has a next big upgrade coming live in December. This is going to allow cheaper transactions, faster transactions. We just saw the L2s at 24,000 transactions per second here. This is the ecosystem breakdown. This is a new record for TPS. And this doesn't account for the new upgrade that we're getting in December that's going to make this even faster than what we're seeing right now. The Ethereum ecosystem is scaling very quickly, and the next big upgrade lands on December 3rd. It's going to make Ethereum faster, cheaper, and easier while staying secure. 30 to 60% less per transfer. Transactions feel 3 to 5 times faster. NFT minting costs drop. Businesses get steadier, near zero downtime. Developers save on gas. It's just going to be better for everyone. And you think to yourself, what is that really going to do for not only the ecosystem, but what is that really going to do for the adoption from an institutional perspective? Because at the end of the day, Ethereum provides a strong backbone to the on-chain economy, secured by over 1.1 million validators and proven over 10 years of uptime. So here you can see some stats from some of the top institutions in the world. Institutions require privacy for counterparties, business logic, and more. And Ethereum is advancing from a privacy perspective as well. And finally, you can see the L2 ecosystem scaling for institutional use. And this upgrade that's coming in December is just going to move us more in that direction. Real world assets and stablecoins are increasing. This is all from the Ethereum Foundation. They made a long thread around this. This is the sum of the funds deposited in DeFi applications of Ethereum, with over 67% of global total value locked and the deepest liquidity layer of any blockchain. So, of course, it goes on and on to talk about Ethereum and some of the benefits, but I think you get the story by now. So while Ethereum fell this week, I'm not really looking too deeply into that, because I'm looking at the forest and not the trees. And Tom Lee on CNBC here said the recent pullback is due to the October 10th flash crash, which is still showing ripple effects in the market right now as a result of all that leverage. I'm not going to play that clip. He still maintains $7,000 Ethereum by the end of the year. This is on November 3rd on CNBC. He was talking about this. $200,000 is his price target for Bitcoin. And here you have Tom Lee himself reposting the Coinbase institutional page, which is talking about the largest liquidations in crypto history. Again, pointing to that October sell-off, essentially being a flush out of the markets where leverage is cleaner, but liquidity gaps remain. Capital is rotating selectively, and the macro risk lingers, but structural demand builds. And I think that's one of the best ways to put it, is that, yes, while there are concerns around a liquidity perspective from the crypto sector in general, Ethereum is very clearly, at least to me, going to be evolving as a winner in the adoption and the structural institutional demand that we're seeing. And not only that, but also the accumulation from a volume inflow that we're seeing from institutions. So every single week I talk about these things, and every single week it seems more and more important due to the volume that we have of news, because there's so much going on in this ecosystem. And I think BMNR is going to benefit. I think Ethereum is going to benefit. And I think it's going to be a matter of time. And I'm not really letting the price action for this week or this month upset me, because I know that thematically we're up and to the right, and it's just going to take a little bit of time for the price to catch up to that. But I think when it does, it's going to be in a big, big way. Ultimately, however, this is the reason why I continue to accumulate BMNR. I bought more shares and I bought more calls this week for BMNR. Ultimately, I'm going to continue doing that. Even though BMNR is in my top 5 largest positions, I'm going to continue buying more because of all of these things that I see out there. Anyways, I apologize for this video being so long. I hope you appreciated it. If you did, please share it out so that more people can just be aware of what's happening in the Ethereum ecosystem. None of this is financial advice. Please do your own homework and invest with your own convictions. I'm just a guy on the internet talking about the news. Hope you enjoyed it. I will see you next week for the next BMNR weekly recap. I do this every single week. I have been doing it for the past month and a half now. Thank you so much for listening, and I'll see you in the next one.